Welcome, everybody, to Leaders of Lifestyle Podcast. I'm your host, Michael Ferraro, for another market update video with the man, the myth, the legend, Mark Pruner. Mark, how are you?
I am great, Michael. I personally think that you're the myth. I
I'm the
wish that I
myth,
was
yeah,
in the
for
shape that
sure.
you are.
Yeah, for sure. Well, thank you so much for being on with us. We love your expertise and bringing you on to talk about the market in Greenwich. We're going to be talking about the quarter one that we just had. We're going to specifically get into inventory, sales, the reason why we're looking at the market that we currently are right now, and then some future predictions. So let's get right into it, Mark. What are we looking at as far as the current market overall before we even talk about inventory?
Well, the first quarter was amazing. We set a new all-time record low for inventory. We were down 80% from where we should be normally this time of year. Having said that, our sales were up 34% over what they were in the last pre-COVID quarter, which was the first quarter of 2020. Now, they were down 27% from the first quarter of 2021, but that was a record quarter for the first quarter. So you can either look at the donut or you can look at the hole. The whole is, yes, sales are down over last year when when we had more than twice the inventory that we have now. But sales are up substantially. In fact, they're up 92% from the first quarter of 2019. So sales are doing very well. What is incredible is that they're doing it with practically no inventory. Our previous all time low for inventory back in 1991 was 293 listings. As of the middle of last week, we had 136 listing, which once again is a new all-time low. We've been drifting down for 6 months. We flattened out for the first couple of months. Luckily, the last 3 days, things are looking up, and we're actually up 21 listings because it looks like everybody was waiting for April Fool's Day to list their properties. So hopefully the spring market will finally get here. We'll see some inventory growth, but it is just incredible how low inventory is and how sales are above our 10-year average.
Yeah, we had looked at some stats and kind of we predicted like mid-April being the high of inventory, but it's so as far as listings coming on and the amount of people putting their stuff on because they want to get into that spring market, but they don't want to wait too long, and they're trying to wait for the weather to improve the photos and everything like that. But it's so hard to track because by the time a lot of these properties hit the market, they're already gone. So
And
it's
that's
so hard.
exactly right. Inventory in this hot a market is a little deceptive in that something can come on. Well, actually, we had a property come on in March on a Wednesday, and it went to contract by the following Thursday.
Right.
So it was on the market for 8 days, but never appeared in inventory either for the end of February or the end of March because it was already into contract.
And we usually have a log jam of properties at certain price points. It used to always be when you start to get over the $5 million mark, you're going to start to see a log jam, just build up of inventory, especially when you get even higher over the $10 million mark. Um, are we seeing that now? Are we seeing any sort of build up at any price points, or are we across the board pretty much the same amount of time on market where it comes off?
Um, the basically the traditional rule is that less than 6 months of supply is a seller's market, and we have that all the way up to $5 million. And in fact, I'm calling less than 3 months of supply a super seller's market, and we have that all the way up to $6.5 million when you include the contracts. Um, the Interesting, the high end market has partially shifted to the October November period when people get their long term
Bonuses and yeah.
stock options vesting. It used to be they got a big cash bonus in January and they went out and spent it in February and March.
Yep.
Now, the only segment that you could call slow is our over $10 million market, where we have uh, 28 months of supply based on sales, but throw in the contracts, and we drop down to 16 months of supply, and that's compared to um, several years ago when we actually had 10 years of supply.
I remember
So
the days of
backcountry is
90
back.
months of inventory, or not 88 to 90 months of inventory.
Yeah. And and it was one of those deals where there was so little market, so few sales, that if you had two sales, all of a sudden we dropped from 10 years of supply to 6 years of supply.
Right. Yeah. Yeah.
But we're not seeing that now. Um, the As I said, all the way up to $10 million, we are looking at only 9 months of supply. Throw in, if you figure that based on the contracts and figure the contracts close in 45 days, we're looking at 6 months of supply all the way up to $10 million.
Yep.
And it's not that there's a huge amount of inventory even over $10 million. We're looking at a total of 19 listings,
Yep.
which is up, actually down 3 listings from what we had last year.
Yep. It's also this shift into off-market success. Now, I talk to buyers every single day at higher price points, and they are now shifting to, if you're going to send me something that's currently on the market, I don't want that, because it's only on the market because it wasn't prime enough to sell off market. And it's just the perception that's starting to happen. So now you're getting off market. I'm currently in contract on a couple off market deals that no one really knows about, obviously, because it's off market. But another probably same thing with you. So it's also deceptive for inventory and for people that don't realize that a lot of stuff is happening. There's still so much real estate being transacted still, even with low inventory. That is the general public.
Yeah, no, I mean, you look at our months of supply, it's very low. So what is on the market is very busy. But as you say, we have an entire dark web of shadow inventory, of inventory that nobody knows about, except for the people who are actually involved. In fact, in our office and at Compass in Greenwich, we no longer say hello to each other. We say, do you have anything off market?
Yeah, right, exactly.
Because we've got so many buyers that we really need, listings for them. If we can get listings, we can sell them. Having said that, 28 of our 136 listings at the bottom last week had been on for more than a year. So it's still very possible to overprice a listing,
Sure.
or to have a listing that's very problematic, or you get divorce situations, you get airship situations where people don't want to sell. They may have it on the market, but it may not really be for sale.
Right. I mean, every single product and property is distinct to itself. And yes, there's still a hole that you can fall into with overpricing or mistaking your property for being more desirable than it really is. It's about really understanding the trends and what this consumer is looking for. I mean, the consumers that I'm seeing are really looking for, on the higher end, just talking higher end. It's either something very grand, Georgian, even the red brick style is coming back in with the circular driveway, or the smaller group, though, but there is a group that really wants something different, outrageous, cool, contemporary, and modern, and both of which fall into different parts where the super moderns have never really been built. That wasn't a big inventory thing. There's not a lot of those going on. There is some of these Georgians that have been on or been sitting off market and been completely renovated on the inside, which is such desirable property right now that anybody who's got anything like that is seeing a huge ability to sell some stuff for probably what's percentage above normal market value that we're seeing now for some of this. What would you say, Mark?
That's the other thing, is in 2021, only 45% of our houses in Greenwich went for over list.
Mm.
whereas in Westport it was 55%. And a lot of that has to do with inventory.
Yeah.
We had ended the year with 160 listings in Greenwich, whereas Westport had several dozen. So that even though it's a smaller town, proportionally, it was still much lower. And so, therefore, you're seeing the lower the amount of inventory in the town, the higher the percentage you have going over list price. My brother Russ and I just did a sale where we're looking at, if my numbers are correct, of the 19,000 houses sold going back to 1999 when the GMLS started. This will be the 17th out of 19,000 for the total dollar amount over list. So if you've got something, as you said, that's a great property that's in move-in condition on a good piece of property, the bidding could just get outrageous on it.
Yeah. Yeah. And especially where, and this is a good segue into the bidding portion. And depending on what price point, obviously you'll see, you'll switch off of the people who do the financing and switch it on into the cash market. Um, with now the bids still coming in with very affluent buyers who are having the opportunity, um, interest rates, that was a big deal, right? The interest rates went up and they went up substantially. And I'm starting to hear some rumblings now. Almost been about a month now since they've slowly been going up and will continue to go up. I'm starting to now hear rumblings about how the interest rates starting to affect the markets on the lower end. It's not really hitting in the higher end. But what's your prediction for interest rates and then hitting the Greenwich market?
Yeah, no, you're exactly right. Literally, it wasn't until last Thursday that I heard any effect of this higher interest rate. I think the Fed obviously the Fed and Congress way overstimulated the economy, which we had $2 trillion sloshing around in the economy. I was listening to one of the top economists on Channel 13, and he was saying it takes about a year to 18 months for that amount of money to work through the economy. So the stimulus that you're seeing last year is still going to be stimulating the economy now. Um, the and as a result, I think inflation is going to stay up. You're also going to see interest rates rise. And paradoxically, when interest rates rise, sales go up initially because the smart money wants to go in before they go up even more. As to where they're going to go, I don't know. Maybe 5%. I don't know about 6%. But I'm an attorney who became a realtor, not an economist or a banker. So take that with a large grain of salt.
Yeah. But prediction for the rest of 2022, I see it being you can break the interest rates up to from 4 to 5. You can even push them above 5. Historically, anything prior to 2008, it was never under 5. But even if you go to 5, 5.25, 5.5, I think in 2023 they will come back down. But I still think the fact remains, like you said, for the high end buyer who's paying cash, they don't care about that part so much, and it's not stopping the inventory problem. So we still have an inventory problem, which is creating the supply and demand issue. So I think that properties will still go up. I think values will probably not fly up as high as they were, but I think you'll consistently see another super healthy real estate market and super healthy year of sales, just like we've talked about. Where do you see the pricing and sales, as far as the amount they sell for? Do you see that plateauing off at all?
Well, the so interest rates only indirectly affect the all cash buyer. And last week, as an example, we had 22 contracts, of which only four were contingent on a mortgage. which means that much of what's driving the market are all cash people. The stock market has been on a multiple year rise. There are a bunch of people who think that as interest rates go up, that the stock market will drop, and so they're looking at reallocating funds. But I think what's really driving the market and will continue to drive it for the rest of 2022 is the whole work from home movement. That's a once in a century change in your work home balance. And so commuting is shorter. It used to be you would commute for an hour and a half to Wall Street, 3 hours round trip, 5 days a week for 15 hours. Now you're doing it maybe 2 or 3 times a month for many people. So that means that it's much easier to live out in the suburbs, and with the low employment rate, employers have to accommodate that. The employers that are insisting that people come back are getting major pushback, and you've got Jamie Dimon versus the head of Citibank, who said that she's happy to accommodate people who need to work from home, and you're seeing people migrate over there for that reason. People will give up a fair amount of income to get a better and happier life and more time with their family.
Yeah. So the work from home crew will definitely continue to push it. Do you think quarter two, as we exit quarter one and go into quarter two, we're going to get into the nicer weather? We're going to get ready for everybody who was thinking about putting their house on to actually put it on. All the people that try to do it secretly in the shadow market, as you said, the dark web. Uh, then, oh well, it didn't sell there. Well, I would like to take my shot at putting it at the market. Do you think we could possibly see an explosion of sales and inventory come up here and just really have a crazy quarter two?
I would really hope so. I think it's unlikely. We've in Greenwich, we've sold 1,800 houses in the last 2 years. A good year is 600 houses. So we've sold essentially 3 years of inventory in 2 years. And I think a lot of the people that were thinking about moving have done so. Not that we aren't going to have sales come on. Not that we, as I said, we just had 21 new listings come on in the past 5 days, which is great. And you're exactly right. If we get the inventory, we could see outstanding sales. But I'm just very concerned as to how many people are likely to move. People like Fairfield County. They like Greenwich. Um, we have 22,000 housing units here in a town of 63,000 people. And as I said, only about 600 of them get sold a year. So you're talking about 3%. One out of every 30 houses actually comes on. Now, it could be that we do get this major shift, but I think that's what we just had, and I think we're coming out of it. So, what I'm hoping, well, and it's kind of paradoxical because I'm hoping we get more inventory, and one of the ways we can get more inventory is for sales to slow, and it will give people more opportunity to see stuff. But it's really unknown. And then the dark web is really dark. We don't have good numbers for that, so we don't know how that's fared. It traditionally back when I one year when I did get good numbers back in 2016, it turned out it represented about um, 22% of the market. I think it's probably higher, but as to how high, I don't know. But yeah, that the 863 sales we had in 2021 and I'm sorry, 2020, and the 1,007 sales that we had in Greenwich in 2021 are there are hundreds more sales that we don't have
I don't
numbers
know
for.
about. Yeah, exactly. So
Yeah.
there you go. The prediction for quarter 2 is we hope that we have this big explosion of a lot of different things, but most likely, Mark, your prediction is that we'll probably have a slowing down a little bit of sales, and then give hopefully a chance for people that have been sitting on the sidelines or missing opportunities, get them in there and buy some properties and kind of plateau out in the
Yeah,
sales.
and that's only a slowing compared to 2021. Compared to historically, I think that we'll have a good quarter, that will have good sales, and we'll have a lot of houses that will come on and go off fairly quickly. I do think, based on and basically it's two short data points that are close together, so it's very difficult to estimate whether you're going to look like this or whether you're going to look like this or what. But I do think that the we will see a little more inventory at the lower end as the demand slackens there, but the demand is still extraordinarily high right now in Greenwich. We have 6 listings under $1 million, whereas in 2019 we had 50 listings under $1 million. So, and there are entire areas of town where there's no listings under $1 million that normally have a dozen or more. So yeah, if the interest rates slow demand a little bit, we may see more inventory, but that doesn't necessarily um, equate directly to more sales. It just means that the demand has gone from feverish to hot.
Right, right. I still think it's going to be hot because I still think maybe the lower price points that are using more of finance might back off a little bit, but you have such a backlog you've always traditionally had more buyers at the lower price points. So, oh, okay, the interest rates really bother you. Well, they got 10 behind you that are ready and okay with that. Whereas in the higher price points with cash, it doesn't really bother them anyway, and they're okay with the prices at certainly the way it is. And then there's nothing really being built. You got at this
Yeah.
point, what it is recycling houses that have been maybe purchased a couple of years ago that had renovations inside because people are going to live in them as customs. That are like, man, I'm about to make a couple $1 million on this. Let me just do that. And then it
Yeah, no,
becomes.
we have a lot of building going on, but in reality, it's adding very little to the housing stock because, as you say, it replaces an old house with a new house about 80-90% of the time.
Yeah, yeah. So, Mark, I think quarter 1 was unbelievable. We kind of knew it was going to be good, but we didn't know how good. And you never really know coming out of a 2021 where we had all these records and over 1,000 homes sold, and you go into quarter 1, you
Right.
don't really know. But I think that it's been insane, like as you just mentioned. Quarter 2, we'll see what happens, right?
Yeah, I mean, the last spring we had what I call the frenzy, from late March to April. It was just crazy. Everybody wanted to buy. As you said, the warm weather came along and people really wanted to get out. But that was also the period of when the vaccines were kicking in, and all of a sudden people were getting out of their houses. They had been sitting there for a year or more, saving up money, and they had money for a down payment. The stock market was up, so they had even more, and it was just incredibly hot. That's the way it's been, um, for the last month, but at just lower inventory levels. So there isn't that much to sell. Um, I'm Yeah, I just don't see that continuing, particularly with higher interest rates. But it could,
Yeah,
and it's going to affect different parts of the market different ways.
absolutely. Well, Mark, again, love having you on. We're excited to have you
Thank
come
you, Michael.
back on again after quarter two to kind of talk a little bit more about it. Once again, tell everybody where they can find some more information on you, Mark.
You can find more information on GreenwichStreets.com. And Russ and I now have a radio show on WGCH,
Yes,
10 a.m. on Monday mornings, which streams over WGCH.com. We'll get you on one of these days to talk about
absolutely. Sure.
all the great stuff you do and the interesting people you interview and what it looks like from your side of the market.
I would love to be on. What's the show called, Mark?
It's called Greenwich Streets. It's 10 to 11 on Mondays. WGCH 1490 are streaming at WGCH.com.
We'll make sure we give that some credit on the bottom on the bottom in the description. We'll put all the information on there. Everybody, ladies and gentlemen, thank you again so much for tuning into the Leaders of Lifestyle podcast to hear this quarter one real estate review with the man, Mark Pruner. Mark, thank you so much for coming on. Ladies and gentlemen,
Michael, thank you.
You got it. Ladies and gentlemen, till next time, take care.